In this video we are going to talk about why Bitcoin is falling right now. So before starting this video, please like this video and subscribe to this channel for our future updates. Since reaching all-time highs a few months ago, cryptocurrencies have continued to lose value, extending the downturn. When it comes to the digital asset market, however, the more significant question of how typical investors view it will remain unresolved as long as the tug-of-war between crypto bulls and crypto bears continues. Miners may suffer a double whammy as a result of the decline in the value of Bitcoin. As a recompense for delivering mining services to the network, they receive a portion of their revenue in Bitcoin. In other words, as the value of Bitcoin falls, their revenue falls as well, with no meaningful compensation for their costs. In light of the high levels of fixed costs involved with Bitcoin mining, it is possible that our net revenue will decrease significantly if the present Bitcoin trend continues. It didn't appear as if today's price movements in the most popular cryptocurrencies were particularly extraordinary on their face. With Bitcoin, crypto, BTC, trading at slightly over $43,000, it was down over 6%. While this was happening, Ethereum, crypto, ETH, dropped by almost 8% to roughly $3,425. Not a single fundamental point stood forth as justification for such drastic changes. As a result, investor mood appeared to be based on the belief that crypto asset values will rise and fall in tandem with monetary policy, and the Federal Reserve's tightening stance is perceived as a danger to further higher moves in Bitcoin and Ethereum. After reaching a high of almost $47,700 on the 1st of January 2021, the price of Bitcoin has fallen to $43,030. According to CoinMarketCap data, the prices of other major cryptocurrencies as Ethereum, Solana, Cardano, Binance Coin, and others have been falling precipitously since the start of the new year. Despite the recent decline in Bitcoin prices, ordinary cryptocurrency investors are still in a celebratory mood. Hardcore crypto enthusiasts, on the other hand, are not surprised by the negative price movement in the crypto markets, which is nothing new. The present price decline, on the other hand, could be ascribed to the uncertainty that is currently affecting all markets. It comes in the wake of previous crashes caused by Tesla changing its mind about accepting Bitcoin as payment for its products and China cracking down on initial coin offers, ICOs, blocking exchanges, and warning against speculative trading, among other factors. Earlier this month, China ordered Bitcoin mining in its Sichuan province to be shut down altogether and also instructed banks to stop enabling cryptocurrency transactions, marking the latest in a series of restrictions on cryptocurrencies. Currently, the People's Bank of China, the country's central bank, has effectively banned digital coins after declaring that all cryptocurrency transactions are unlawful. There has already been an influence on the cryptocurrency market as a result of this decision. Bitcoin was not the only cryptocurrency to be affected by the initial repercussions, with most of the top 10 witnessing a drop in value as a result of the event. Dogecoin, which was initially created as a joke in 2012 before seeing its shares soar, has also seen its market price plummet, whilst Solana has seen its market price climb by more than 8% in the same period. Musk's influence cannot be underestimated, as seen by the fact that, despite the fact that companies such as PayPal, MasterCard, and Facebook have backed cryptocurrencies, the Tesla announcement nevertheless had a significant impact on the market. While traditional and crypto markets continue to grapple with the impact of the coronavirus on global economic recovery, concerns about interest rate hikes in the United States, and the impact of protests and political turmoil in Kazakhstan on the country's significant mining operations appear to be driving the decline in Bitcoin's price. Since reaching a new all-time high of $69,000 on November 10, 2021, Bitcoin's price has fallen to levels last seen in late September, with the cryptocurrency presently trading at approximately $43,000. Bitcoin is the world's top cryptocurrency, and it is the most valuable. A lot of things are occurring over there, and there is a lot going on in here as well, but we have to talk because there is a lot that is happening. Active wallets, that's what I'm talking about. One of the issues that we're experiencing right now in Bitcoin is a lack of active wallets, which is one of the indicators that we can use to determine whether or not trading activity has slowed. We achieved 1.2 million actively trading wallets around a year ago today. Now we're down to 971,000. This suggests that we've only lost about 20% of our value. Now, because of this, there's some indications that we could build up a liquidity crunch that may trigger something very similar to the December flash crash that we saw, as we've been seeing Bitcoin decrease fairly considerably today. Anyway, what's significant here is that some form of liquidation flash crash, and then recovery between recovering from that same day we plummeted down to 42,033 inside the same day, ended up closing out 800. That's a very huge change there. We were still down presently 5% that day, but certainly nowhere near as negative as we were intraday. As a result, there is a possibility that we will see the same sort of wicking occur over the next few days to a few weeks, with the reason for this being if cryptocurrency continues to trend downward, whether it is due to its correlation to the Nasdaq or for the other reasons that we will discuss later in the evening. It doesn't help when you have a less actively trading book. Sometimes that's because people are taking their cryptocurrency out of hot wallets, purge accounts that are in the maintenance, cold storage, which means that they're not being actively traded, which can sometimes be good if more was being blocked off as essentially a store of value that had delayed. You have less selling pressure. Unfortunately, at the same time, the inverse is true, and there is less total trade. So that's the problem we're dealing with right now. So this issue is a fall of wallets and blue as a phrase or of cryptocurrency. Is it cool storage to break chain, single, large 10 cent? This should help your trading. It's a fourth realizing as a selling pressure on the current price. Action. Now, another issue that we're having, lowered all-in open interest in futures. Some of this could be due to safety concerns and the fact that there are fewer trading accounts in cryptocurrency, but according to the Chicago Mercantile Exchange, the total amount of crypto futures trading has ranged from $17 to $50 billion over the course of history, with Bitcoin futures trading accounting for $17.4 billion in October 2.5 months ago, representing a 39% decrease in trading. Notice how much this is tied to trading, and with Diamond Hand, it's really wonderful that the market institutions trade. This can be sort of the crypto that's that institutions are really concerned and they need to hedge and risk assets. And one of the things still do is they'll sell items that have an elevated beta, and regrettably, tech stocks within the S&P 500 have a high beta, and the association between Bitcoin and tech stocks keeps growing more and more evident. So if hedge funds are selling off tech stocks, metals or Federal Reserve today, by the way, absolutely unaware of what's going on, me all to get those about a 3-week hold. This is also only for a few minutes on the cryptocurrency side of things. As a very brief summary of what was out there, we had talked to the Federal Reserve about having the largest balance sheet ever, high inflation, more short-term bonds than ever before, and then inflation was brought in last week, when we discussed how a cryptocurrency, specifically Bitcoin, was not trading like an inflation hedge at all. Rather than trading like a risk asset, it's trading more like a risk-on asset, or even a textile asset. Indeed, we observed this when we dissected the performance of the cryptocurrency market last week in relation to the type of activity taking place in the actual market. As people's fear of inflation rising up and their dread of the Federal Reserve boosting interest rates, driving Bitcoin down rather than up, because the objective of going up was money printing without inflation. For the purposes of summarizing, Fed worries and high inflation equals bad for cryptocurrency, lower inflation equals better for cryptocurrency. This is just another example of why the Fed is being accommodating, which is beneficial for crypto. In terms of active wallets, we've seen a decrease in the number of them so far this year. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.